Hey, what's up, everybody? Today I want to talk to you about one of the most common questions that I get in my CPA practice. Now, it comes in various different forms, but the basic question is, I'm starting a business, what do I need to know? All right, now normally I would have you set up a 1-hour appointment where I charge $200 to figure out about your specific situation and then give my advice as far as entity choice that you would want to go with and give you the differences between those so you can make an informed decision. I would also then give you the steps that you might need to take in order to get your business up and running. But right here on YouTube, what I'm going to do is I'm going to give you that appointment for free. Now, of course, it's not tailored specifically to your situation, so I would highly recommend you still reach out to myself or another CPA where you can get more tailored advice for your specific business. But this is going to cover a lot of your questions and should be very helpful to you as you're starting a business. So the first question that pops into my mind and the first place that I go is, what type of entity do you want to be? How do you want to structure your business? Now, that is going to be based again on what you want to do with the business, some of the details surrounding your business. But let's cover those different types of entities real quick. You've got the sole proprietorship, which is basically what you are if you just open up shop and say, I'm in business, I'm going to start selling something on the side, or I'm going to start charging someone for my time to be a consultant to them. Then by default, you're just a sole proprietor. If you use anything other than your own personal name, the county in which you live in is going to require that you file a fictitious name or a DBA, doing business as. So that would be Brad Wooten, doing business as Wooten Solutions. All right, now I can be a sole proprietor, I can use that name, but I would have to file that fictitious name report where you file it with the county, usually. It could be different in your area. And then I think almost always, I know here in Orlando and pretty much everywhere, I think you have to actually advertise that name in a printed source. Now, I know that seems old school with the internet now, but like here in Orlando, the Orlando Sentinel, for I think $80, they'll run the ad with the words, the language that's supposed to be in it, and advertise that doing business as or that fictitious name so that you are in compliance with that law, that regulation. Another business entity type is an LLC, a limited liability company. Another one is a C corporation. And then the last one actually isn't a legal entity, but it's one that everyone wants to know about is, hey, so-and-so told me that I should be an S corporation. That's what I want to do. I want to set up an S corporation. Real quick, this gets a little confusing because an S corporation does not exist for legal purposes. It's not an entity you can go to the Department of State, or maybe in your state it's called the Secretary of State. You can't go file articles of incorporation as an S corporation. That is merely a tax election that you make. A limited liability company or an LLC does not exist for tax purposes. All right, so you would go to the Florida Department of State and you would file your articles of organization for a LLC, a limited liability company, but that does not exist for tax purposes. So for tax purposes, if you're a single individual and you file your articles to create an LLC, for tax purposes, by default, you are a disregarded entity, which puts you back into that sole proprietorship category where you're going to file your income and expenses for your business on your personal tax return on Schedule C as if you had not set up an entity at all. If you and a business partner, me and a friend, we go start an LLC together, by default, we are a partnership. And you would have to file a partnership tax return. Now, even if we didn't set up the LLC, but I start business with another person, a lot of times I see people say, well, yeah, I'm just going to put half of the income and expenses on my return. He'll put it on his. We'll both be self-employed, Schedule C. That doesn't work. If you go into business with another person or one or more other people, then by default, you're going to be a partnership. And that's the same as if you're an LLC with multiple owners. Now, you can also elect for your LLC that is either a partnership or a disregarded entity to be treated as a corporation. And then typically what happens when you do that is you file the election to be an S corporation. So the most common business structure that is out there is a single individual who has filed articles of organization for an LLC, and then pretty much simultaneously will file the election with the IRS to be treated as an S corporation. You file a corporation tax return specific to S corporations, which is different than a C corporation, which we're not even going to talk about because pretty much no one does the C corporation at this level, where it's a couple of owners, small business type of thing anymore. All right, so when is it beneficial to go with the S corporation? What I usually tell people is it's only beneficial once you're making enough profit to not only cover what the IRS would deem as a reasonable salary, but you're making profit above that. Or in a different situation where you need to retain some of the profit in the company in order to reinvest in inventory or in order to continue to expand your business or to spend on marketing the next year. So we'll get into that a little bit. But that key is reasonable salary. So you can Google S corporation and reasonable salary, and you will find a ton of information. Now, you'll find people out there, and even if you go sit down with a CPA, you might find one who says, hey, look, if your salary is 50% of your net profit and the other 50% is distributions to yourself, you're fine. You might find someone else who says, oh, you could do a third. Or, hey, you can just set it at a base of $30,000 a year, and the rest can be profit. Now, the biggest reason why people go with the S corporation is because by letting some of your net income be distributions instead of salary, you're saving Social Security and Medicare, which comes out to about 15.3%. So that's on top of your income taxes. All right. So take an individual who is self-employed and their net profit is $100,000 a year. Self-employment taxes roughly are going to be that $15,000. And then you're also going to pay income tax on the same $100,000. So when you go to an S corporation, what happens is you have to pay yourself a salary now. It is its own corporation. You are now a W-2 of that corporation, even if you're the only owner, only employee. You will get a W-2, you will have to do payroll reports, and you will have to set yourself a salary. So what might happen is someone might say, okay, I'm going to set my salary at $50,000, and that other $50,000 of my $100,000 profit is just going to be income distributions to myself, so it's not going to be payroll. And what happens is that $50,000 now is not subject to self-employment tax because you have this S corporation. It's not subject to Social Security and Medicare at all. It's only subject to income tax. So if you remember, under both situations, self-employed, Schedule C, you're paying income tax on all of it and Social Security and Medicare on all of it. Now, you're only paying Social Security and Medicare on the payroll portion that we set at $50,000, and the other $50,000 is only paying income tax. So what you're saving there is 15% of the $5,000, which would be roughly about $7,500. Okay, so you're saving $7,500 in taxes in that situation. So what I typically tell people is an S corporation makes sense when that amount of taxes you're saving is more than the amount that it's going to cost you in additional fees for your CPA, because you have to file another tax return. The business can't go on your personal tax return anymore. It has to go on its own S corporation tax return. So you have additional tax prep fees there and compliance fees. The LLC or the ongoing cost of having LLC is pretty insignificant. In most states, it's around $200, so don't usually worry about that. But now you also have to have payroll reports. So you're going to have to file quarterly payroll reports. Even if you don't pay yourself that quarter, you still have to file $0 payroll reports once you start payroll. And so you got payroll reports, you got a W-2 at the end of the year. So there's professional fees that go along with this S Corp status that, let's say those are going to be $1,500. Well, we want to make sure we're saving enough in taxes for it to make sense and to be financially beneficial to make this jump. Now also, the IRS doesn't usually like it when you make decisions solely based on saving taxes. Sometimes it's okay, like maybe you decided to give a charitable gift solely for the purpose of saving taxes. I don't know many people who would do that, but that would be okay because you're still following the letter of the law. You still can deduct the charitable contribution. But with an S corporation, it's got to make sense that you're going to do this. And the biggest factor here is the payroll has to make sense. So in my example of paying yourself half in payroll and half in distributions, that's not an okay way to determine your salary. You'll find people who says it is, but it is not. The IRS is going to look at what your reasonable salary is. They don't define that because it's going to vary case by case, okay? So if you were to get audited, what's going to happen is the IRS is going to come in and they're going to evaluate what it is you do, okay? You're a consultant. Are there other consultants in your area? What's your gross revenue? What would a consultant get paid as a W-2 employee if they were working for another company doing this same job in your area? Maybe that's going to come out to a range of $60,000 to $80,000. If you're not in that range, if you're paying yourself $20,000 and doing $80,000 of distributions, that's not going to be okay. What they're going to do is they're going to take some of that. They're going to say, okay, reasonable salary should be 60. You're only doing 40. We're going to now recharacterize $20,000 as salary. You now owe us Social Security and Medicare on that $20,000, which would be about $3,000. And you're now going to have to pay penalties and interest for a late payment of that tax. So why not do it right from the beginning? Let's go on monster.com. Let's go on salary.com. Let's figure out what a business your size should pay someone to do the job you're doing. Let's set your payroll as that amount and still benefit from the net profit that gets to come out as earnings to you as the owner. Because there is an element here where you're the owner. You're taking the business risk of opening up this company, and therefore you deserve some return on your investment for starting a business, and that's what comes out as those distributions. But you still have to be paid a normal salary or a reasonable salary for the job that you're doing, okay? So that's the biggest thing with the S Corporation. You want to make sure you get that right so you don't end up having to go back and recharacterize some of your earnings as payroll and pay the penalties and interest plus the payroll tax that you failed to pay on that. Now, I'll see that all the time. This is the biggest thing. Well, so-and-so, my neighbor, is doing it. I'm sorry. I'm going to say that not only do you want to save taxes by paying the least amount of taxes possible, the other way I save my clients' taxes is I have them do it right. Now, there's some subjectivity here, and there's some gray area, and there's some flexibility here, but I have them do it right the first time because what I'm saving you is the penalties and interest and the taxes later, plus that peace of mind. You know you're doing it right. You're not looking over your shoulder, constantly worried if the IRS is going to catch you and have a problem with what you're doing. So you're sleeping a lot better at night. And still, we're trying to minimize your taxes within what's acceptable. So that is by far the biggest issue, and that's why I took the most of this video to cover that, and that's your benefit typically of the S Corporation. There's a few other benefits too, but that's the key one that most everyone seems to be after. And there's a point where that makes sense, and I help my clients determine when that makes sense. I don't want them simply paying me fees for another tax return when it's not going to save them any money. So don't go to a tax preparer who just blanket from the start says, S Corp is the way to go, that's the best thing for you. Because you can imagine different industries, that reasonable salary is going to vary from business to business. So just because you're making a net profit of $50,000 doesn't mean it's okay and right, or not okay and right. I mean, you can obviously go with S Corp whenever you want. But if your reasonable salary is going to be the total of your profit, then it doesn't benefit you any to do an S Corporation from a tax perspective. So why would you do that other than your CPA is just advising you in order to boost his fees? Okay, so we need to sit down and actually figure out when it makes sense for you to elect S Corporation status. Now, the next thing you want to do is, okay, you set up your LLC with the Department of State. You want to make sure that they approve that, because if they kick it back because your name is too similar to another business and you start going down the rest of the road first, you're going to have some issues here. Because the second step is getting your EIN, your Employment Identification Number. That's your tax ID number from the IRS. You can get it online from their website. But you want to make sure that your business entity name has been approved before you do this, so you don't have to go around and try to change the name that is associated with that EIN. That's not a very easy thing to do. It takes time. So Florida Department of State, if you're here in Florida, or your Department of State or Secretary of State, you file the articles of organization for your LLC. You get it set up, you get it approved. It usually takes about a week. And then you get your EIN. And now with those two things, with an LLC officially approved by the state, and with your EIN, you can go into the bank and get your business checking account. Even if you're just a sole proprietor running a side business, I always tell you, get a separate checking account, because it's going to help you at the end of the day determine what was business and what wasn't when you're trying to figure out your business expenses and income for your tax return. Now you've got your bank account. Now, are there other licenses? I'm a CPA, so I have to have a professional license through a department here in Florida that license is professional. So I've got my CPA license, but then I also have to go get this other license to do business because I'm a professional. Then on top of that, Florida calls it business tax receipts. Others call it, I think, business licenses as well. So that gets a little confusing because it's a little bit different. This is just paying a fee for the privilege of doing business. In North Carolina, I think it was $50 a year. Here in Florida, I believe it's $60 a year. And there's one for the county. There's one for Orange County, a business tax receipt is what they call it here. And then there's one for the city of Orlando if you're within the city limits proper. And so you've got to get those two a lot of times for the right to do business in your area. So that's a lot of information. That covers a lot of what I would typically talk to you about. Now, again, we would personalize this to your specific situation, what you want to do, where you're going with it, what your goals are. Are you going to try to start a business that you want to sell in 5 years? Or are you trying to start a business that's just on the side with your free time? Or are you trying to start something that's going to replace your W-2 job that you're going to do for the rest of your career? So these things are all things that go into what you want to consider. Don't just go read an article about why an S Corp is the best entity. It by far is the most used, and I'll say it most likely will be a good choice for you, but you want to make sure that it makes sense for you at this point in time with where you're at and where you're going. You can always start the LLC and do your business for a couple of years and then build it to a point where, okay, now it makes sense to do an S corporation. Let's file the paper with the IRS and make that S Corp election now. You don't have to do it at the very beginning of your business. You can choose that at a later point in time. All right. So again, I hope this is helpful for you. I hope it might have answered a lot of your questions. Feel free to reach out to me with others. My name is Brad. I'm the owner of Wooten CPA. My goal is to bring peace to your tax and financial responsibilities. One of the ways I do that is through these videos on YouTube. Don't forget to subscribe and hit the bell so you're notified when other videos come out. I appreciate you watching.